following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote here is by Barbara Kingsolver. Hope is a renewable option. If you run out of it at the end of the day, you get to start all over in the morning. Isn't that a beautiful thing? Market-wise, let's take a look at it out here. We get the Dow Industrials up 265, Nasdaq's up 34, S&Ps are up 20, gold contract down $13.60, traded at $1,263 an ounce. Silver up 11 cents at $17.37 an ounce. Platinum up $7 at $1,234 an ounce. Copper up 10 pennies at $2.59 a pound. Light sweet crude up $3.14 at $52.71 a barrel. If you believe what Bloomberg News says, folks, it says, this just came across the tape right before I get on. Oil enters a bull market. Oh, baby. Sell it, baby. Bonds, 10-year bond down 27 ticks at 130.02. 30-year down 1 full point and 17 ticks at 149.11. King dollar down 989 ticks, trading out at 93.74. The euro is up 146 at 114.87, and the yen is flat at 117.62. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Pretty cool, folks. If we go look at the SPY, this is what you're looking at. You got a bounce, no doubt, okay? But what you're going to see out here, and when we talk a bounce, you're talking a bear market bounce out here, folks. Intraday, it's been having a hard time holding on to price. We, right now, are at 204.22. We've done 86 million shares. That little baby, that 86 million shares, folks, is coming into the monster you see this is coming into. It's pretty amazing, actually. You're coming into the 28th of 168 million shares. Okay, so now the way this shakes out is this. The 28th, folks, what we had is this. When we went downtown from a price point of 204 to 199. 204.48, I believe. Let me just see. Yeah, 204.29 to be exact. Now, we've hit 204.48 today. So your correlation goes like this. If we close over 204.48, and we're at 204.31 right now, yes, it will go to the highest swing point, which is 206.26. You close under the 204.29, and that's a failure on price, failure on volume. And what you also have, which we haven't even brought into consideration yet, what you are also doing is that we're coming right into the spike high from December 18th. The spike high on December 18th, the top of that high was 203.92. So you close at 203.92 or lighter, that's even more bearish, because that number there had 257 million shares. So your correlation goes like this. 257 million, you're coming into that right now at 87. We got an hour left. That can do another, but let's say $1.10. It's still 110 million versus the 257 million from December 18th. And then your closer proximity, though, is going to be the January 18th level. That January 18th level, it's 204.29. That's the number. Intraday, if you've been out here trading intraday, you know what you have. The market crawls higher and gives it up faster. Those are bear market phenomena, folks, okay? That's how that baby has been shaken out. Now, let's go over and we take a look at the Dow Industrials. We'll go look at the diamonds. Inside the Dow Industrials, what you have is this. And this is pretty cool, just the way this thing is shaken out. The strongest stocks inside the Dow are all dead cat bounces. You get Caterpillar right now as the leader, up $3.11. Chevron is up $3.43. Goldman Sachs is up $4.61. And ExxonMobil's up $4.22. Bottom line, each and every one of those, they've already got smoked. You got a dead cat bounce going. You know, we'll see if, in fact, they can continue and get to higher price with some juice behind it. The diamonds thus far today have done 5.7 million shares. That 5.7 million is coming into 11.7 million. So it's pretty intense. Bottom line, the diamonds do have price with them. It's already over the swing of the 21st. It's right into the 26th. So it's the diamonds and the Dow would be saying, yeah, the Dow can get higher. NASDAQ. We take a look at the 3Qs, different animal. Inside the NASDAQ, folks, okay, what is putting monster pressure on the NASDAQ right now and has been all day long is the IBB. The IBB right now is only down $2.80. It's trading at 316. The IBB basically moved lower, monster volume, and what you're going to have with the IBB now is this, is that you're going to have another lower swing point with volume. Thus far, the IBB has done 2.7 million shares. That's after making a high out here of 1.4 million. We traded down to 310. We're at 316.77 right now. That little baby is turning. That in itself puts monster pressure inside the NDX 100. If we take a look at the 3Qs, what we have with the 3Qs is the 3Qs are up 69 cents. And you have 22 million shares. This one's really a joke. 22 million shares is going against 43 million. Yeah, so let's say we do another 2 or 3 million into the close. Your number goes like this. The 3Qs haven't even been able to get to the high yet of the 29th. The 28th, rather. That is 103.18. We've made 102.79. The way that I suspect what we're going to see coming into this close out here in the S&P, I'm going to do the S&P for a second, is that the future S&P, the way we've traded with the future S&P thus far, is that we have got to 2040. That number there, I suspect coming into the close is going to be around somewhere about 2020. So we'll see that 2029. 2029 will be the first acceleration on the way down, but it's a big one. We take a look at the gold contract. Now, gold, folks, this is so cool what's happening out here. What is happening in the gold market is this. The same phenomena that we had last Thursday is that gold was down $30 last Thursday. Today, what you have, gold is down 15 bucks. We're at $12.61. We were down $21. We hit a low of $12.55. We've done that on 164,000 contracts. Well, that 164,000 is going to 244. So bottom line, gold wants higher price. You want to take a look at that correlation inside the GLD. It's about as dramatic as you can get. What happens in the GLD is this. The GLD thus far today, which is GLD now is the Street Tracks Trust that trades tenth of price of the gold contract, of gold, actually spot gold. GLD has done 6.9 million shares. You're going into the downdraft from last Thursday, and the downdraft of last Thursday, we had done 11.9 million shares. You're also going into the sign of strength from how it busted topside on the 15th of January. The 15th of January did 17 million, so you can see the correlation. You're dealing with 17 million versus last Thursday, which was 11 million, 11.9 million versus today. Bottom line, gold wants higher price. The thing that's amazing is not only that it's happened again in the same type of structure, but the equities themselves refuse to back off. Pretty amazing. King Dollar. Let's go to King Dollar because what we're going to see with King Dollar is this. This phenomenon is going to be a trip in itself, meaning has King Dollar topped out? What we have thus far today is this. You're off the high, and you're coming off the high with volume. Okay, we're at 55,000 contracts, which is an expansion of volume. It's not monster volume, expansion of volume. We're at 93.71. If we get the same type of volume tomorrow and we close under the 93.50, let me get this continuous going. I believe it's 93.53. You'd have a much better confirmation that number one, 93.56. 93.56 is the number. You close under that tomorrow, Friday, with volume, this thing's going to get whacked. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow Industrials up 270, Nasdaq's up 36, S&Ps are up 23. Let's go to our man John in Winchester. Hey, John, what's going on?
Hey, Tom.
You still digging out?
Oh, 3.5 feet in Winchester.
My daughter sent me some pictures, and it's just incredible up in the Boston area, folks. Exactly how much snow they have. I mean, they're not kidding around. They got some snow, man. And I guess, unfortunately, that cold weather came in pretty much, right?
It's right now it's 19. It's a high.
That's cold. That's not. And in Boston, folks, it's damp, and that wind chill is pretty amazing. So we'll send you some good sunshine.
We're talking Wednesday and Thursday, another storm. So.
Oh man, unreal.
I feel, but yeah, well, I have a question for you. Again, I bought your book, and I'm trying to get back into reading candles. The Texas Instruments.
Yeah.
I'm trying. How would you read the last 3 days of that candle?
Well, it's certainly not. If you're looking at yesterday would be a hammer, it's not. What happens at a hammer, it would go like this. A hammer, folks, what happens, a hammer is and hanging man are the exact same type of symbol in council charting or candlestick charting. But a hammer has to be after a downdraft. And this is just a consolidation. You can make the case that it's not a hanging man either. It's a nothing, zero. That's how. It's
not a long-legged doji or something like that.
It's a doji, yeah, it's a doji. But dojis, what you want to be looking at, like you have them at highs here, big time. You know, we have you have a doji on the 4th of December at that high at 55.78. You got it the next day. You got a hanging man the next day. You got another one. The next highs out there. You had 2 of them. And then the third high. So this has 3 lower highs, and each one of them has a doji. So if you're going to shot this thing, let it go a little higher, though. You know? Yeah,
that's what I was thinking about, shotting it.
Yeah, I'd let it get up to this 54.60 mark. And right now you're at 54.25. And it doesn't sound like a lot of price, and it's not. But you want to see how it tests that level, because we got to that level. That had 12 million shares up there, so that'll get tested, man.
Okay.
Cooking, brother.
Thank you, sir.
Have a great one, man. Have a safe one.
Bye-bye.
Let's go to Mark in Fort Collins. Hey, Mark, what's going on?
Hey, Tom. How you doing today?
I'm doing great, man. You having a good day out there?
Always a great day.
Cool, man. Cool.
Yeah. Hey, so for a while we had the relationship of the dollar up to the market up. Now we got the dollar down and the market up.
Yeah.
And for a while there we also had oil down, market down. And now we have oil up, market up. So what's your take on all that?
This is probably 1-2 day phenomenon. The divergence is out there. And the reason I'm going with that, Mark, is this. And for all the folks who have the gold report, I put this in the gold report today. And specifically because the gold equities and the silver equities, a couple of them were actually positive. It's like, oh, this is heaven. This is like a gift from the trading gods.
Yeah.
So.
And then you have time for one more. What do you think of the dry shippers? We talked about this a couple of weeks ago, dry ships and Diana shipping.
Let's go take a look at that. Okay, so.
Having a nice day today.
Yeah. Let's pull this up. So if I pull up dry ships first, that's up 7 pennies. And yeah, so there's no action there. The Diana is, let's go pull up Diana.
Breaking out a little bit.
Yeah, DSX. This has been a stronger stock anyway, so let me see. Oh, now you get action. Now that's action. Okay, DSX. Okay, so Diana, that's a fleet of bulk carriers. Okay, that's cool. So the low's 625, the high's 1393. We've done 725,000 shares today. So you're coming into the swing point that had 600,000, so it's beating that up, which is awesome. If we take this and we put this on a weekly, the weekly is going to look good too. So on a weekly, let me put this on a weekly. It looks like on the weekly that we've. So the first time it bottomed, folks, you bottomed at 640. We had 5.2 million. Then you went to 628. with 5.8. Oh, good. Okay, so this is what we did. And then you went to 625 with 2.3. So, you know, a dead cat bounce can get this thing to 894. Where I'm going with that mark is the week of September 26th.
Yeah, I see that.
Yeah, I mean, you know, that's a normal dead cat bounce. And even if you look at if you want to see it, folks, okay, when I started the show off here, I was talking about the aspect of across Bloomberg came across saying that oil entered a bull market. I mean, it just cracked me up. It said, really? Oil entered a bull market? Bottom line is that what you have, if we take a look at ExxonMobil, okay, what you're going to see is that Exxon is in a consolidation, but it's going to go after these lows again. Exxon's doing 16 million shares today. You know, we were downtown on 26 million shares, 24 million shares, and 22 million. You know, it's not done on the way down yet, so.
Okay.
Cooking, brother.
All right, thanks.
Okay, man. Have a great one. Have a safe one. After the close out here, folks, we're going to have some action, no doubt, after the close. You get Chipotle coming out with numbers, Walt Disney, Wynn Resorts, Aflac. The Wynn Resorts is going to be a big one to watch. The reason being is that in Macau, all these gambling casinos are getting hit pretty bad. Wynn is up $6 right now, trading out at $156. That is down from a price point of $247. So let's do a little speculation on this baby because this is pretty wild. If we put this on a weekly, what you're going to see is that we're down off 247. You're trading 155. We have a high volume low spike from December 19th at 133 that hasn't been tested. Now, this equity here has done 1.6 million shares today. It's up $6. People are betting, folks, that this is going to be a good number, but not a lot of people. So my take on this is that, number one, when this comes out with numbers, guess what? We are going to go lower, not higher. And that high volume spike is vulnerable to get tested, like ASAP, too. So, because this volume is anemic. I mean, yesterday we did 9.2 million. Today is only 1.6 million. And what do we got, 35 minutes left? Yeah, you get 30 minutes left. If we take a look at this intraday, but I can see why they're making a bet on it. I mean, the bottom line is that people are looking at it saying, hey, it's down $90 from the high that was generated 3 months ago. If we go take a look at this on a 10-minute basis, we'll see how these buyers and sellers are lining up. Oh, this is so funny. As soon as I pull this up. On a 10-minute basis, what you have is that someone just came in with a sell. Pretty amazing. I mean, a big sell, too. If you see the spike, that spike right there on the 10-minute basis, we just did more volume in 10 minutes than we almost did 10% of the volume. We did 8% of the volume all day in the last 10 minutes on the way down. 122,000 shares. So that's saying that what you're going to see is that even as Wynn comes into the close out here, we're not going to be up $6 in Wynn coming into that close. This is Tom O'Brien. This is TFNN. Dow Industrials right now up 281. Nasdaq's up 39. S&Ps are up 23. Gold down 15. Silver up 7. Platinum up 650. Oil up $3. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow Industrials right now up 269. You get the NASDAQ up 37. S&Ps are up 21. As we do each and every Tuesday, we have our man, Mr. Andy Hecht. And don't forget, every Tuesday, Thursday, 5 to 6 Eastern Standard Time, Andy has an outstanding show right here at TFNN. He also has a great newsletter, folks. It's the Technomental Commodity Report. The way you can get that is you come over to our website at TFNN. You go into newsletters. You go into trading newsletters. And you can test drive the Technomental Commodity Report right there, absolutely free. Now, as you're over there, what you're also going to see is that our man, Mr. Andy Hecht, is going to be having a seminar. And he is a free report that's out here right now. You can It's a free webinar, seminar. You can come over, and what the report is all about is what every technomental is telling us about what? About crude oil and what you need to know right now. And there's nothing like it, folks, because the bottom line, as I said at the beginning of the show, Bloomberg News came across the headline that oil has entered a bull market. And mind you, that in that context, since oil has entered a bull market, just so you can get that context correctly, oil in 6 months has just gone from $98, and we're trading at 52 right now, and we hit 44. So I think they must be having some fun with that. I'm only kidding. They actually believe it. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man.
Good. By the way, what kind of bull is that?
You know what I'm figuring here? Okay, so watch what we did. What we did here, folks, is that we're at 43, right? 42, let's see, what do we hit? On this contract here, we hit 43.58. So someone is saying that if you're up 10% off of 25% off of that, because that's what it would be, right? You're up $10, right?
Yeah.
You're $11. They're saying we're up 20% off of that. That must be a bull market.
Hey, it's a sharp move. Listen.
Oh, yeah, it should be.
Right. Yeah, there's a lot of reasons. There's a refinery strike. Listen, I've been saying for the last couple of weeks, got to watch gasoline because we're coming into gasoline season, and that's really outperformed. You know, that gas crack spread has gone from $7.50. Let me see where it is right now to $14.50. You know, so gasoline is we're coming into that season. Demand should be good. This refining strike, is adding some juice to the market, but I don't think we're coming into a bull market in oil, and actually, I think it might be a game of whack-a-mole here. Oh,
I agree, man. I mean, it's set up. What happens, folks, is this: is that if we go over and we take a look at this oil contract, a normal bounce, just a normal bounce, okay, can get you up to 58, and you can make a case you can get to 73. I mean, oil went one way, folks. Hey, we'll see where this shakes out, but
exactly.
This is at this point to me, it's a dead cat bounce. Boing.
Yep. Boing. Exactly. Boing. Hey, I want to talk about one thing in particular today. I want to talk about, because a lot of people look and are trading, these oil ETFs and ETFs and all of these kinds of commodities.
Yep, I saw your article on Seeking Alpha. It's a beautiful thing.
Right. Okay, so I want to talk about this because this is one, and even people who've been trading for many, many years, many decades can get stung. And I got stung last week in one.
Okay.
So let me tell you what happened, all right? There's in platinum.
Yeah.
In platinum, there's two ETN type products. There's
right.
PPLT, which is the big one.
Yeah.
120 some odd dollars a share.
Right.
And then there's PTM, which is smaller, but it's priced, around the $12, $13, $14 range.
Sure.
And the beautiful thing about that one, I thought, was there are options on it.
Okay.
So, I thought this was kind of sexy, so I bought some of this. I kind of like platinum. I've been telling you that. I think that, it's
sure.
10 times rarer than gold. Long term, it's a good hold. Anyway, so what happens is the following. On January 26th, which is last, I think, January 26th.
I see it.
we had PTM close at $13.85 a share. PPLT, the big platinum ETF, closed at $121.31. And platinum was down on the day on the 26th. Now, on the 27th, platinum rallied. PPLT rallied. Actually, the low of the day in PPLT was higher than the close the day before.
Okay.
But PTM, which closed at $13.85, traded all the way down to $12.63 and stopped me out.
Yeah.
This is an abject case of manipulation.
Right.
And it's a lesson for us. And that's what I wrote the article on. It's a lesson. When you're buying these ETN products, you have to realize that while they purport to represent the underlying asset that they purport to represent, they are not that. They are an individual trading sardine that will trade the way it trades because of buyers and sellers.
Sure.
And it's something that's very important. It's a very important lesson. And I thought it was important to write an article about and important to talk about on your show today, because I want people to be cautious and know what they're getting into.
Right. And I guess one of the biggest things there is that because there's no liquidity, you can really push it around.
Absolutely. The market makers push it around. They see some stops. They go for them. My stop was at like 1330. I got executed below there, on just a whoosh down and a whoosh up. And there's really not much you can say about it. But it for me, in the future, on these less liquid ETN products, I'm going to buy call options or put options, depending upon, so I don't get stopped out, or I'm going to trade them without stops if I decide to be in them.
Hey.
Because I don't want to get,
Okay. I don't blame you. Now, this is wicked, folks, okay? So I'm quite familiar with these, okay? And the reason I'm so familiar with them, folks, and Andy, is that when ProShares first started, right? And ProShares were the first leverage product, folks. What would happen many times is that your net asset value versus where the equity would be trading, folks, prior to the market open, right, would always be skewed. It'd be off. And it's like found money, okay? And you can still do that, by the way. You can take, even the big liquid ones, you can take the net asset value, you can take what it's trading at, and it will come back to the net asset value pretty much all day long. So when the ProShares first started and the direction shares, what you had, and I'm sure many of the traders remember this, the margin requirements were different. They were just the same like a regular equity, so you could buy like 10 or 20,000 shares at a time, like pretty easy, right? So in that context, you take the net asset value, and if it was higher or lower pre-market, that was kind of free money for 10 or 15 minutes, right? That's the first one. Now, the second one that you're talking about right there, though, which I've seen done. I haven't done it, but I've seen it done. You know how that on that side you got taken? The other side where you can take that market maker is like this. So check this out. I have done this once, actually, but not on this product. What you do is that you have one button, and you're in the option market, right? And simultaneously, you're hitting the options and then hit the equity. And what happens immediately, folks, okay, is the market maker doesn't know what the heck is going on, because you're hitting him and he's selling you on this one here, he's selling you the equity. He thinks he's going to take you, and then the option orders are coming in, and he's going to cover the option orders.
Right.
The bottom line is, don't trade them. No, I get it, because it's important. And, and inside this article you have about the oil ones. There was an oil one that blew up,
Yes.
Yeah.
Yes, absolutely. Yeah. And look, in that article, I show an ETF that's worked real well, the GLD.
Yes.
It's very liquid. They can't screw around with it too much. The USO came out the same, basically, like within a year or two of the GLD.
Right.
GLD, tremendous success. USO, abominable failure in terms of tracking.
Yeah.
So you just have to. The message is you got to learn a lesson. You got to really understand what you're trading. Now, there are times to trade USO because it correlates nicely intraday.
Yeah.
And a lot of these things are meant to be traded intraday. But when you buy them for long-term investment, as I made the mistake of doing in the PTM, it's not a good idea. I mean, it's fine if you're trading without stops. If you're trading with stops, you are basically leaving yourself out there to get taken advantage of. Just, be aware.
And you got to trade with stops. That's the reality, right?
Well, exactly, and that's why I won't trade this, or I'll trade options on it if there's any liquidity in it, in the future. Or I'll go back to trading platinum like I always do. I'll go to the futures market.
Right.
So very interesting. I just thought it was worthwhile to, to let the listeners know.
It's important.
What happens.
It is absolutely crucial to understand how these are correlated, because they're all derivatives, folks. That's the bottom line. They're derived off, and you made a great example inside this article. So if you search Andy Hecht oil seeking alpha, folks, inside this article, I thought the correlation you made about why oil with the backwardation and is much harder to correlate.
Right.
You know what I mean?
Right. Exactly. I just posted it in the den again.
Oh, cool, man. Cool.
Yeah.
You stay right there, Andy. Stay right there. Cool,
Sure.
right?
Sure.
Look
Absolutely.
at that. Dow wants to hit 300. We get this is Tom O'Brien, Andy Heck. You stay right there, folks. They're coming right back. Dow Industrials right now up 297. You got the Nasdaq up 45. S&Ps are up 25. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials are up 301, NASDAQ up 50, S&Ps are up 26. We're talking to our man, Mr. Andy Heck. And don't forget, every Tuesday, Thursday, right here at TFNN, 5 to 6 Eastern Standard Time. Right after my show ends, we get our man, Mr. Andy Heck, coming up. Outstanding show. And needless to say, commodities, Andy, we haven't seen this for a while. You get crude oil up 5.5%. Hey, they got a new name for the heating oil. You see this? New York Harbor. This is a trip. New York Harbor. Let me get. So this is the new heating oil.
Oh, it's always been New York Harbor heating oil.
Oh, has it?
Yeah. As far as back as I can remember.
Oh. It says product name changed. I get okay from heating oil
in the physical market. But perhaps that's because of the weather in New York, huh?
Yeah, totally.
They need heating oil there.
Corn, wheat, copper, everything.
Everything's on the upside.
Except gold.
Gold is correlating perfectly with the dollar this year.
That's funny. Yeah,
it is. It's kind of makes sense for the last month of trading, right? Dollar up, gold up, dollar down, gold down.
I don't know.
Feels that way for now.
How does that make sense?
It doesn't make sense. It doesn't make sense. Who says any of this makes sense?
That's perfect. I got it. I like it.
Hey, let's go back to oil for a minute.
Okay,
because,
cool.
I'm going to do this workshop.
Yeah. Yes.
End of this month.
Right.
The 25th from 5 to 6 p.m. Eastern time, and whoever signs up gets an updated copy of my report on crude oil, and it's an important report because it kind of tells you what the things to look for.
Right.
There's a couple of things to look for, and I have a chart up here of the crack spread. And this is a very interesting, the gasoline crack spread. Now,
yes.
Leaving the strike aside, the strike at the refineries is 3 days old.
Okay.
If we go way back to January 13th, we see that crack spread was very weak, around $7.50. This thing has doubled. This is a clue. We're looking for a bottom in oil.
Yes.
For the last month, 2 months, and that bottom is going to come from demand, from increasing demand. Now, the crack spread is telling you that there is an anticipation for more gasoline demanded in the market. So that crack spread has doubled in less than a month, 3-week period. All right, and it's not just in the nearby March. You have the for example, you have the crack spread out in June, trading at $21. So that's even, $6-7 higher than where it is nearby. And that makes sense because that's where the demand is going to be. That's driving season.
Yeah, I know. It's right around the corner. It's so crazy, right?
It's right around the corner. So when you're looking for a bottom in crude, there's a couple of things you got to look for. One, crack spreads. Where's the demand going to come from the products? Because no one buys crude oil. As consumers, we buy gasoline, we buy heating oil, we buy all of the products. So you got to look for the demand there. The second thing you have to look for is term structure. We talked a lot while crude oil was going down, and even before it went down, about how the backwardation was disappearing and going to a contango. Now you have to watch that contango. When it starts to narrow, that's going to say that there's some supply issues there. You have to watch that. You have to watch location spreads. For example, the difference between Brent and WTI. It went down to flat. Brent versus WTI. Yes. But when the Saudi king died, it popped higher because of uncertainty. So very interesting. Now that spread is at $5. So the nominal price of crude oil or any commodity is one thing. But looking at it in light of its term structure in terms of the physical market, in terms of the processing spreads, the intra-commodity and the intercommodity spreads, how they reflect to other commodities that can be substituted. This all goes into the kind of calculus, and people have to put these tools into their, analytic toolboxes to really understand markets. And I think that report will try to at least try to help people and listeners to on what to focus on, and it changes every day. There's a lot of volatility in these things. But when you see trends taking place, then you can say, ooh, there's a good chance of a bottom here or a top here in markets. So
no, I love the structure that you're teaching, and I can see why Andy Hall can have so many different trades on inside the oil market, because there are that many moving pieces. But when you actually break it down, as you're breaking it down, there are not that many moving pieces, and a couple of them will give you a slight edge for a certain amount of time.
Andy Hall used to call it feeling the pulse of the market.
Yeah.
You can't feel the pulse of the market from the volume in a commodity, from the volume that trades in the front month every day.
Right.
You have to look at all the pieces. It's like a giant jigsaw puzzle. And when they line up, which they do, at certain times, look, in June, these things lined up to send crude oil lower. It's going to line up for a bottom. I'm not so sure that the bottom is here. I think that you're going to see, nice selling come into this crude oil market.
Well, what cracks me up, and folks, this number was coming on this morning on CNBC, and what it was is that everyone and their mother has been storing oil. And as soon as I heard that, I says, oh, man, that is not how it works.
No, it's not.
That's just not. What happens, folks, is that most of the time, and what has happened is that markets keep getting quicker and markets keep getting smarter. So, people do operate quicker. There's no doubt about that. But, just when I saw that, I says, you know what, no, that's not going to be as easy as people think it is. You know what I mean?
Right. And what's telling me, Tom, that we're not in a new bull market for crude? March 2015 crude is right now $52.36 a barrel.
Okay.
And March 2016 crude is $62.83 a barrel.
Wow.
$10 higher. That's telling us there's no supply issues in crude oil.
That's amazing, man. That really is amazing.
That's 20% plus.
Hey, I like this cheap gasoline, man. I
know you do, but don't get too used to it.
No, I know. You got to go fill up those.
Hey, that's another thing. Gasoline. It was. Wait, let me put a gasoline chart up, because this is really staggering. Really,
percentage-wise, it is right.
On January 13th, we were at $1.2605 a gallon wholesale.
Yes.
Right now, we're almost at $1.60 wholesale. I can guarantee you, the prices will go up a lot faster than they went down at the pump.
Yeah.
They're very good at that.
No, they're awesome at that. Well, listen, man, we appreciate the great update, and of course, we look forward to the program at 5 o'clock, man.
Thank you, and I'm looking forward to Chris Gaffney in your second hour.
Yeah, hey, and it's wild, folks. Chris Gaffney's coming up from Everbank. Chris is the president of Everbank World Markets. And it's amazing, Andy, we were just looking at the number of, right now in Florida, folks, okay, this is peak season. And out of peak season, we happen to have a lot of units, and 50% of our units, right, are taken by Canadians, okay, on a short-term basis. And it's so cool because we were continually telling them, I was continually telling them, man, move that money into U.S. money, okay?
Yep.
And the people that did, they were elated. The people that didn't, yeah, it got expensive,
They're paying more rent.
Oh, it's wicked. It's wicked, man.
Have a good one, Tom.
Brother. You stay right there, folks. We're going to be coming back. Dow Industrials right now are breaking that 300 mark. You get the Dow up 304. NASDAQ is up, 50. S&Ps are up 26. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Alberto Ferretti. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We had the Dow Industrials up 305, NASDAQ up 51, S&P's up 24, gold contract down $15, trading at $1,261 an ounce. You had gold go down, folks. Gold equities refused to budge. What a phenomenon. Gold was actually testing the lows of last Thursday with dramatically lighter volume. The GLD did the same thing. Rejected lower price, has much lighter volume. Silver was up 4 cents, $17.30 an ounce. Platinum up $7 at $1,234 an ounce. Copper, big move in copper. Copper was up 10 pennies at $2.58 a pound. Light sweet crude up $3, up $2.93 to be exact, at $52.51. Bonds, you had the 10-year bond down 28 ticks at 130.02. 30-year off 1 full point and 17 ticks at 149.11. We'll go over that. That was light volume in the pullback. And King Dollar came off the highs with volume. We'll see where we get follow through tomorrow. That was down 989 ticks at 93.74. If you get a close at the end of this week under 93.53, folks, and you get a follow through at volume in the next few days, bottom line, that'll set up a much larger correction in the King Dollar. Euro up 143, trading at 114.65, and the yen trading flat at 117.49. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Let's start with the SPY. What you're going to see out here with the SPY, folks, is this. We take a look at this baby. You put this on a daily basis, and what you're going to have is this. It held price, no doubt. It got over the downdraft of the 28th. It was going into January 28th. The top of that level there was 204.29. We're at 204.84. That says you're going to go up to the top of that range. The top of that range is 206.26. Volume was 117 million versus that downdraft out there of 168. So it doesn't have the volume going with it. Had the price, so you go out into that next swing point. Inside the Dow Industrials, actually percentage-wise, what we had is this. Percentage-wise, we had the Dow Industrials were up 1.7%. NASDAQ was up 1. The S&Ps were up 1.4. If we go inside the Dow Industrials, we take a look at the Dow. We had putting juice into the Dow. In fact, there wasn't one Dow stock that was red today. The top four, however, were dead cats. And these are equities that had already got killed. You had Caterpillar was the leader out there, up $3 at $83. Chevron was next at $347 at $109. You had ExxonMobil at $267, up $267 at $92.25. And Goldman Sachs was up $475, trading out at $180.24. The NQs. Let's do the 3 Qs when we take a look at the NDX 100. This is what you have happening with the NDX 100. Now, 3 Qs traded to a price point of 102.98. Volume was 29 million. That is anemic. And what has happened to the 3 Qs also is that it couldn't make the 103.18 mark. Does it mean something? Yeah, it means something. And particularly it means something because of this, folks, is that what you have, and I'm going to put the futures up right now for you so you can see how these futures were trading. What you have is the biotechs. The biotechs were basically hurting the NASDAQ and the NQs in particular. If we take a look at the futures are at 42.18. The high of the 28th is 42.34. Volume-wise, what we had inside the future market is this. Coming up, we did 281,000 contracts. That is coming into that downtrend out there with 363,000 contracts. So the NQs need a lot more help. Gold. We go to the gold market. We take a look at gold. What you're going to see with gold out here is this. And this was real divergence out here once again today. And this is what you have. Gold pulled back to 1255. We did volume of 166,000 contracts. It basically laid at the lows. I mean, it's $5 off the lows, $6 off the lows, but it's basically still there. What gold is doing, folks, is this. Gold, number one, is going into last Thursday's downdraft. The correlation there is last Thursday we had 244,000 contracts with 166. What it's also doing is coming into its strength, where on January 15th, that's when gold went from a price point of $12.27 up to $12.68. Bottom line, you're building cars, continue to build cars for a higher price. The equities themselves refuse to back off, which was pretty amazing. That is the second time that has done that in 1 week. Now, so we'll see where this baby does shake out. Inside the dollar. Now, King Dollar, here's the divergence, folks, and this is what it is. The market, every time King Dollar was going down, market would go down. King Dollar goes up, market was going up. Today, what do you have? King Dollar's down over 1,000 ticks, market's up 300 points. Bottom line, King Dollar's down 1,000 points, gold is down 15. Correlation. Correlation, folks, divergence in a big way. We'll see where this divergence shakes out, meaning will King Dollar continue lower, gold goes higher with the rest of the commodities? That's my take on it. Where I'm coming from with that is the aspect, the equities themselves refuse to back off. King Dollar. What did King Dollar do? King Dollar basically came off the highs. Right now, we're about 18 ticks away from basically getting into a lower range. King Dollar has been a one-way trip here for quite a while. And in fact, it's been a one-way trip, folks, since May of 2011. Right now, King Dollar did 56,000 contracts today. You get down to 1,000 ticks. We're at 93.73. If we get a weekly close under the 93.56 area, with this type of volume, if we get this type of volume tomorrow, what you're going to have is this. You're going to have a change of trend with volume off the highs, which would basically say you're going to get a much larger correction than a normal correction. And it looks to me that that can be very easy to do. The reason being is that the run on King Dollar has been extraordinary. The whole world at this particular point thinks that King Dollar is never going to back down again. Well, guess what? Nothing goes up forever. Nothing goes down forever. After the close out here, we had CMG. Chipotle came out with numbers. And this one, this baby CMG, this is getting hit after the close. Chipotle closed at 7.26. It's trading down, let's see, 15. It's trading down. It's trading down $40 right now. You're trading at the price point of $6.84. And what Chipotle is saying, their sales trailed estimates. They're going to buy back 100 million shares. Look at they're buying back at highs. That's so crazy. It's unbelievable. That blows my mind with some of these restaurants. Well, no, just not restaurants. Everyone in this market, okay? But Chipotle is at highs, folks. You're at $726. Why would you buy a stock back at $726? Of course, they're trying to hold it up. You know, they could have bought it back a year ago at $317. Bottom line, is it going to help them? No, it's not going to help them. We take this and we put this on a weekly basis first off, and what you're going to see on a weekly basis is that the bottom of the gap is 694. Right now, I believe we're trading under that. Yeah, we are. We're trading at 683. So she's going to blow by the gap. You blow by the gap, and just got trouble. Put this on a. Okay, so. Hey, this could be vicious. So let's look at this again, and this just might have to do with there's so many restaurants out here now. What you have is this: the first leg down Yeah, it's 588. And so it's kind of at 583 right now. But you hit 588. If we hit this baby tomorrow, 588 with more than 1 million shares, it'll take it apart, and then you're going to see a correction that's going to be really nasty. Really nasty. Because the next place down off of that would be the 420 area. Not a good area. This is Tom O'Brien. This is TFNN. You stay right there, folks. Dow Industrials finished up 305. NASDAQ up 51. S&P's up 24. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world? Let's go over to the Wynn Resorts. Wynn just came out with the numbers. Wynn traded up $6 today. We're at $155 right now. She's trading at $150, giving it all up. And if you want to see something on Wynn, if you were listening last hour, folks, there's no doubt that folks were making basically a trade on this, saying, okay, I think we're going to have higher price because, but I think they were looking just for a dead cat deal. That's how the thing was shaken out. Bottom line is that Wynn didn't have any juice behind its sales. After the closeout here, it's put juice in, but that's on the way down. What Wynn has, it has a high volume swing low laying out here at 133, and bottom line, it's going to make its way down to those levels. We'll see what they have to say. Right now, it's trading at 149, and they missed revenues. The estimate, this is pretty intense, actually. The revenue, the estimate was $1.42, and they came in with $1.20, so that's a big miss. Revenue, they did $1.19 billion. That was the estimate, and they came in with $1.14 billion. So it's pretty cool, actually. The revenue estimate wasn't down that bad. The earnings per share was, though, and I suspect what that is all about. That is about the monster gamblers in Macau. And what you have there, of course, is that when they have that much bread, guess what? That's where all the earnings per share number comes in, because you can see that the revenue number was kind of the same, down a little, but the earnings per share, different ball game. We go over to Disney. We take a look at Disney. Disney closed at 94. That's trading. That Disney had been up $2.17. It's trading 97.19 right now. Let's see what Disney has to say. That estimate was $1.06. They came in with $1.27. Their Shanghai Park is also going to open up in 2016. They beat bottom line. They beat top line. If we take a look at Disney, we'll put this on a daily basis first, rather a weekly basis, and see where she's setting up. What we have with Disney, of course, Disney also is ESPN, which has some big numbers inside it, and the way that Disney's looking right now, this has been a one-way ride. We started out in 2011 at $29, and bottom line is that she's going to be out there hitting highs. Gilead, G-I-L-D, that come out with numbers. Let's see what Gilead is saying inside the biotech arena. Gilead closed out at a price point of $107.18. That's trading at $108.11 right now. And they're going to buy back 15 billion shares, and the stock still can't move. That's pretty intense. So let's see what they're saying. The estimate was 221. They made 243. They're going to buy back 15 billion in shares. That is a big number. It's not helping the equity, however, though. If you take a look at how Gilead has been trading, what you do have is this, is that the high in Gilead is out there at 116, which was established about 3 months ago. You come off that high, and the first leg down had some volume behind that move. So the biotechs in general, by the way, today, folks, we'll go through those right now. The biotechs, what was putting pressure on the NASDAQ and the NDX 100. That was one of the reasons that the NASDAQ and the NDX 100 wasn't up like 1.5%, 2%, like the Dow Industrials were, okay? Big number, no doubt about that. We go over to CMG once again. Chipotle is going to be, it's a highly volatile stock anyway, but what you do have inside of that space, no doubt you have a lot more healthy restaurants that are coming out. Chipotle had closed at $7.26. That was up $14. Now it's trading down at $6.84. And what you do have there is that Chipotle, the best performing restaurant stock in the Standard & Poor's 500 last year, posted fourth quarter sales that rose less than analysts has estimated. Sales at stores open 13 months grew 16%, which is huge. The Denver-based company said Tuesday in a statement, the average analyst projections was for a 16.5% gain. Well, big deal. They got 16.1. Chipotle raised U.S. Menu prices on average more than 6% late in third quarter to help cope with higher prices in dairy, meat, and avocados. The company warned in October that sales growth was slow this year on a to a low to mid single-digit percentage rate. Fourth quarter net income climbed 52% to $121 million, or $3.84 a share, from $76 million. Bottom line is that you have the shares trading down. If we do look at how these babies are trading down right now, we'll see whether it gets back inside the 680 mark. Right now, there's really not a huge amount of damage done, even though you're down $50. It would be the 680 mark that you'd have to get back inside in order to start doing some damage to that equity, because what you had done is on January 6th, the stock's trading at 653. 2 days later, it goes to 688 and then 727, and it has juice up at those areas. So what it is doing right now is that it's coming back into those areas, and as it's coming back into those areas, we'll see whether it's going to have volume or not volume. We take a look at ICPT. This is Intercept Pharmaceuticals. This little baby here, this looks like it's getting whacked. Yeah. So ICPT. The biotechs, folks, are just ready to roll. Intercept Pharmaceuticals closed at 189 out here today. It's trading at 180. That's not the end of the world. Let's see what they're saying. They plan on selling more stock. They're doing a secondary. Now, see, this is just the opposite. This is pretty cool, actually. They're offering out 21.4 million shares as their stock is up at these highs to take in more cash, versus when we just had Gilead. Well, actually, Intercept's off the highs. No, they're off. It's off its highs. Good. They just need money. I see what's going on. Yeah, Intercept. Oh, my God. I remember the stock. This is a stock, folks. Oh, you got to see this chart, because this is a stock, and this is going to make its way all the way back to the breakout area. This is crazy. This is a stock that in January of 2014 went from $65 to $497. $65 to $497 in 1 month. It's been making its way back. It got to a low of 128. This is going to go right against the swing low, probably of $65, which is insane. Bottom line, that's what equities like to do. That's about as bizarre as you can get. What they have done, though, no doubt, is that what they have done is they pull back. The pullback is with lighter volume. If we go back to the IBB again for a second, what you're going to see inside the biotech index out here today is this. The biotech index came off its highs with volume expanding. Now, we got 3 million shares. And what the index did itself, this is what is absolutely amazing, that, fund managers love to buy that 50-day moving average. It got down to the 50-day moving average, and guess what? That's what they were buying. The 50-day moving average was 309.93. It got to 310.13. Does it matter? No, it doesn't. Why? You're going to be right back down there because you got a high volume swing low. You stay right there, folks. Our man, Mr. Chris Gaffney, is going to be coming back. Chris is the president of EverBank World Markets. We're going to be talking currencies. We're going to be talking commodities. And we're going to be talking, folks, that you can open currency accounts at EverBank. Awesome deal.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the TFNN.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We had the Dow Industrials finish up 305, NASDAQ up 51, S&P's up 25, and let's welcome our man, Mr. Chris Gaffney, back. Chris, folks, is the president of Everbank World Markets, and it was so cool because the last time we had him on, that is when the Swiss decided that they were going to basically unlink from the euro. Chris, of course, is the president of Everbank World Markets. And as you're over at our website at TFNN, folks, you can hit that Everbank banner, or you can just go to everbank.com/TFNN. Chris Gaffney, welcome back to TFNN.
Well, thanks. It's great to be here.
You know, Chris, it's so cool because the last time you were here, we had the Swiss basically on Lincoln. What I'd love to talk a little bit about today is this. You know, up north, okay, you know, of course, we're across the country, but up north, you have this wicked weather coming in. The cold front has been amazing. And when down in Florida, okay, where we are, this is peak season. And in peak season, in the real estate market, approximately 50% of the units in the Tampa, St. Pete, Clearwater area are Canadians. And, you know, we happen to be in that business in a small way, but in a pretty big way, but in a small way, okay? And it's so intriguing because when we're talking world markets and when we're talking money, the correlation from this year to last year is pretty dramatic. And specifically, like, let's say a normal short-term unit, folks, goes for $4,000 US a month. Well, what ends up happening is that the fluctuation from year to year has been really from like 4,100 to 4,900. So what I'd love to talk to you about, because we talk to our clients about this and we let them know that, listen, they can protect themselves with one of your accounts every year, meaning that they can transfer money and at least they know what their bill is going to be. So can you explain how these accounts work?
Sure. I mean, we have foreign currency accounts where investors can place funds into any of the foreign currencies and protect the value of that currency versus the U.S. dollar. Now, you know, you spoke about the Swiss National Bank and what happened last time I was on the show with the Swiss currency running up dramatically in value. In general, the dollar's been stronger here recently, but today we saw the euro jump about 1.5% after some good news from Greece. So, you know, with the euro jumping up like that, it actually makes things a bit more expensive for those traveling over to Europe, obviously, and for European visitors to Florida or for Canadian visitors down to Florida. You know, with the dollar strength that we've had, that's actually made things a little more expensive for foreign tourists into the U.S.
Yes, and you know what's so cool is this, folks. Okay, so as Chris saying, I mean, and I think my personal take is that, you know, the dollar's been running higher since 2011. My take is that it's time for a breather.
Right.
And you know, so the Canadian dollar today is 124. And what I love about how the bank accounts are set up, Chris, is that at least you know what the bill is. Do you know what I mean? Like when we gave people our bills last year, right? You know, basically the bills were like 4,200 or something, okay? Those bills, when they're coming in right now, are 4,900. You know?
Right,
so
right.
It's really cool if you have an account set up like that so you know what you're paying. And listen, it can be more or less. You're not trying to do that. All you're trying to do is make a budget for yourself. Do you know what I'm saying?
Well, and corporations do it all the time. I mean, that's what, you know, the foreign exchange market is by far the largest daily volume market of any of them traded. And that's because corporations need to fix their costs. So corporations do it all the time in trying to fix their costs by buying the currency that their contract is denominated in. So, you know, EverBank allows retail clients, individuals, to do the same thing through opening foreign currency accounts here at denominated in those foreign currencies that they know they're going to owe, either U.S. dollars or the foreign currency.
Yes. Now, when we talk currency, let's talk a little precious metal currency.
Yeah.
So you also have precious metal accounts.
We sure do. We have unallocated accounts in gold, silver, platinum, and palladium. And there's a lot, you know, a lot written and a lot of news on gold and silver. But, you know, platinum and palladium are two precious metals that don't get as much attention. And the thing driving those markets right now are automobile sales. You know, platinum and palladium are used in pollution control and the catalytic converters in automobiles. And, you know, we've all seen automobile sales start moving back up. And certainly the demand over in China and some of the emerging markets in Latin America for more automobile sales is driving those markets. And I think really supplying a real push on the demand side for platinum and palladium. So those are two precious metals that may be overlooked by a lot of retail investors. Gold and silver get a lot of the attention, but there's some opportunities in platinum and palladium also.
And you know what's so cool, folks? Okay, so picture this. Gold right now, folks, is $1,260. Platinum is at $1,235. Okay, and just so if we start taking tons of dirt, the bottom line is that, it takes 10 tons of dirt to get an ounce of gold. Basically, I'm averaging this out. Platinum, folks, is one of the hardest metals to get out of the stone. And in fact, I know you know this, Chris, but most of the time, platinum is always a couple $100 over gold. So this is a very different era that when we have platinum that basically is at the same price. Actually, platinum is $60 cheaper than gold right now, which is a mind-blower.
Good opportunity.
Yeah,
it really is.
And what happens with platinum, of course, as you just said, platinum gets used. It gets used up,
It's got the industrial demands, and as they put them in those catalytic converters, you do have some recycling of the metals, but again, not nearly as much, and certainly a lot of industrial demand for those metals. The investing demand is just starting to heat up also. So again. I keep pointing over to Asia and China, but
sure.
With the growth of China and India, those are some pretty big economies, and precious metals are seen over there in their cultures as a better store of wealth. They don't like we may go down and buy some stocks or put some money in the bank. In India and in China and in those cultures, they're much more probable to go down and buy some precious metals to store their wealth.
No,
it's just a cultural difference.
It is, and it's worked for them over the years beyond belief. I mean, that's the reality.
And their disposable income is increasing as their economies grow. India's thought that it's going to grow at an even faster clip than China this year. And as we see those middle classes emerge and evolve, you're going to see more disposable income and more of that income going into the precious metals and demand in China and India, which should serve to drive prices higher and again, makes a pretty compelling story for the precious metals investment.
It does. Now, we have a lot of listeners that no doubt are in the markets every day. The commodity market in general has got hurt. We get a lot of calls here basically about iron ore. And what's intriguing is that I've been looking at the Australian dollar. And, what has happened, folks, is this, and it's pretty amazing, okay? The Australian dollar is one of the strongest dollars in the world. For when the commodity boom was up there, we're talking, $1.08, and now we're at 77. So what gets intriguing there is that realistically, even if you weren't going to Australia, but if you thought that the iron ore market or some of those commodities were bottoming out, that's where you can open an account and do it in Australia. Well, I can give you American dollars and convert to Australian dollars, right?
Right. And Aussie is definitely a commodity-driven currency, along with New Zealand, Canadian, maybe less so Brazil. But, today Aussie's even cheaper. The central bank there cut rates, they had recently cut rates. So, the Australian dollar, again, has been under some selling pressure here recently.
Sure.
But as you suggested, it is down substantially. And of course, it's tough to call a bottom. We don't try to pretend like we can call a bottom of any market, but you certainly look at the trends and look for values.
Yeah, no doubt. It's got to be really cool looking at all these different currencies every day and mechanized-wise putting it all together, right?
It's enjoying. I love it. I really do, and it's a fun job. It changes every day. It's exciting.
It's a great service for the public. I mean, it's a huge service.
We preach the power of diversification. We like watching the markets, but most U.S. investors, when you talk about diversification, they talk about how much they have allocated to stocks and how much they have allocated to bonds, and that's their diversification. Yeah. And we like to remind people that hard assets, adding currencies or metals, those different asset classes to your portfolio can really reduce risk overall on the portfolio and increase return.
It's huge. Listen, folks, Everbank's phone number is 855-750-4051. Chris, thanks so much. Look forward to having you again.
You bet. Thanks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Dow finished up 305, Nasdaq up 51, S&P's up 25. And folks, if you want to check out one of those accounts at Everbank, you can go to everbank.com/TFNN. You can also give them a call at 855-750-4051. There's a great accounts, folks. If you have bills in other currencies, if you have children that are going to go to school in Europe or some other country, or in fact, if you happen to be a Canadian citizen doing business in the United States, even for next year. Basically, know what your bill is. That's what it really comes down to. So after the market out here, what you have, if we go over to MYGN, okay, this little baby is get MYGN. This is getting smoked after the market out here. This closed at $38. It's trading at $32 right now. And bottom line is that they missing their revenue. The estimate was 56 cents. They are going to come in at about 38 cents. This, of course, is a biotech, which was leading the charge earlier out here today. Then this one here, this is a classic, by the way, folks, in a consolidation. And what happens in a consolidation and that when it can't get any juice to the top side. What you have is this. When this came off the highs in November, we came down off a price point of $39, and you came down off that price point with 1.9 million shares. That was November. You go from $40 down to $31. You make it back all the way to $40, and guess what? We did 820,000 shares at that $39.95 level. That was basically... that was coming into 1.9 million. Then what does it do? Gives it up in spades again. And where are we at right now? Guess what? We're at $32 again. That is going to put $31.90 right now. That's going to put some pressure on the biotechs. The CEO is going to be leaving. With that said, Gilead had come out with numbers, and what you're going to see with Gilead is this, and this is going to be interesting. I know the conference call is happening. It's kind of hard to tell whether this was the conference call or this was migrant genetics that was pushing it down. Gilead had closed at 107.18. It's trading 103.30, and it's traded as low as 100. The conference call is going on. The way this is set up, if we take a look at this in the daily, this is already off its highs, and it's off its highs good. We have a high volume swing low that was established out here on December 23rd. That wants to get tested. That high volume swing low is at 101.07. No, it's at, the high volume swing low is at 85.95. It's a big number down there. So what I expect you're going to see is that you are going to see that get tested. What is that going to do? Gilead itself will put pressure on the IBB once again. The IBB, the biotech index, basically made it all the way back almost to positive today. The biotech index closed down 179 at 317. It had been as low as 310. This is a highly volatile index. And the reason you want to pay such close attention to this index is that when this index falls apart, it falls apart big, fast, and furious. The index itself today did 3 million shares on the way down. That, number one, is saying it wants to get tested once again. The bottom of the consolidation on this index is 292. After Gilead's going south, Migrant's going south right now, this is trading down another $1.79. We're at 316. What I expect you're going to see out here is that you're going to see some follow-through to the downward side. Disney was good numbers out here. Disney's trading up. Disney had closed out here at a price point almost at its highs. It closed. Bottom line, it's going a lot higher. We closed at 93. It's up there at 96.99 right now. Wynn Resorts, WYNN, just the opposite. Wynn is having a tough time in Macau. Wynn closed at the 156. She's trading at 151. It's been as low as 148. And Wynn wants to go a lot lower, folks. That's the bottom line. Wants to trade a lot lower. The biggest surprise out here probably is CMG. CMG is getting toasted out here. This is Chipotle. And what I do expect you're going to see out here, there are just so many new fast food places that supposedly are not fast food, fresh food. Bottom line, that competition is getting much larger out here. Chipotle closed at a price point of $7.26, and right now it traded down and low at $6.73. It's making its way back at $6.90 right now. What we will have out here, though, inside Chipotle is this. You get any type of breakdown under this 680. Say, anything under, let's see. Yeah, it has to really get, 689. If Chipotle can stay above 689, it's in decent shape. And what that is, what Chipotle had done, folks, is this. Chipotle broke topside January 7th and 8th with monster volume. So it has some juice there. It's been a one-way ticket. There's no doubt about that. Chipotle's gone one way since 08. Chipotle was a $45 stock, and you talk about a 20-bagger, big-time 20-bagger. I mean, it went up, was fast, it was furious, all of the above. The dollar index, folks, that's the baby that we're going to be watching the next few days. Why? Because what we have inside the dollar is this. Dollar came down today with volume. Now, when you have volume off the high, which we don't have yet, by the way, okay, you need to follow through with volume off the high. We did 58,000 contracts today, which is an increase in volume. Took out a small swing point, which had 56,000. Coming into a sign of strength, however, that had 60,000. So you're still lighter than the sign of strength that the dollar had on the 22nd. Slightly. You get a second day of this, however, with a good 55 to anything over 55,000 contracts. What you would have then is volume off the high. When you get volume off the high in an equity, in a future, in a currency, what it sets up is a much larger correction than usual. That would totally make sense, by the way, inside the dollar. Why? Because what we've had with the dollar is this. The dollar has been going up since May of 2011. That is a big number. That is on the technical basis. On the fundamental basis, what you have is that no matter where you go right now, the whole world is saying the dollar is going to go up forever. If you remember, bottom line at the lows, at 75 or whatever it is, how many times would I be on CNBC and saying, no, it's king dollar and the dollar's going up, that we already hit the lows. Bottom line is just kind of the opposite right now. Pretty amazing. You stay right there, folks. I'm man, Mr. Andy Heck's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. I'm man, Mr. Andy Heck is coming right up. Go get him, folks.